Good evening, everyone. This is Atticus from The Complete Trade, and today I'm going to be taking a look at Bitcoin. So, nothing much has changed since last week. Bitcoin continues to hold on to its gains, which is very impressive, and we are still expecting much higher prices over the next few weeks and months. Moving into the charts, Bitcoin continues to retest the broken white demand trend line as resistance, which is something we spoke about in the previous Bitcoin episode. So, in this specific episode, I wanted to look at potential resistance areas if Bitcoin continues to push higher. The January 2021 top at roughly $42,000 should provide as resistance. Additionally, if we take a look at the Fibonacci channel lines, we recently broke above the 0.618 Fib channel line, which was previously resistance twice, which is bullish. Now, the next significant Fibonacci channel line is the 0.5 Fib channel line, the light green line, which did catch the bull market top back in 2017. It was support in 2021, and it was finally resistance in 2022 before Bitcoin plunged. So the next time that Bitcoin retests the 0.5 Fibonacci channel line should be roughly at around $38,500. So anywhere between $38,000 and $42,000 will probably be the next significant resistance level for the price of Bitcoin. Last video, we also discussed the golden cross on the daily time frame, where the 50 daily moving average in orange crosses above the 200 daily moving average in red. Over the long term, this is bullish, but over the short term, it could be potentially bearish. No analyst can tell you exactly what's going to happen over the short term, but I think we're going to retest the $38,000 to $42,000 region before a small correction. At the end of the day, if you've been accumulating crypto for the past few months and are well positioned, there's no need to focus on the charts all the time and take on unnecessary stress. Just continue to enjoy your life and enjoy your cryptocurrency profits. So taking a look at some indicators, specifically the RSI, the MACD, and the Volatility Expansion Index, there is no bearish divergence on the weekly RSI. There is some weekly bearish divergence on the MACD, but this was a fresh new bullish cross towards the upside, so I'm not really concerned. Taking a look at the Volatility Expansion Index, the Volatility Expansion Index crossed above the gray moving average, indicating that the price of Bitcoin will continue to be volatile over the next few weeks. Now, I can already tell you what bears are looking at. Bears are looking at the gravestone doji / shooting star pattern that's forming on the weekly time frame. And bears are going to tell you that Bitcoin is going to crash to $8,000 or $10,000 from here. And the reason why people constantly believe the price of Bitcoin is going to crash is because your mind is fundamentally fucked. Apologies for being so vulgar, but I want to get my point across. Given how negative the macro environment is between how poor the economy is, Israel, Palestine, Ukraine, Russia, China, Taiwan, your mind is fundamentally fucked. Your eyes and your brain are programmed to think of the worst possible outcome. Bears will point to the weekly gravestone doji that happened on July 10th of this year. Bears will point to the weekly shooting star candle that happened on May 30th of 2022. But what bears won't look at, and what you won't look at, is the 5 shooting star gravestone doji patterns that happened over the past year or two that led to you getting your ass wrecked if you shorted the price of Bitcoin. If you shorted this shooting star candle that happened on December 12th of 2022, you would have lost your ass this whole entire year and gotten liquidated on the way up. So don't make trades based off of single candlestick patterns. I've made this mistake before. If you do make trades and investments off of single candlestick patterns, just quit and go to the casino and play slot machines or something. Just be aware of where you are in the cryptocurrency market cycle. We're in the transitory phase right now, about to enter a substantial bull market. Taking a look at the Elliott wave count, nothing much has changed. I still believe we are in a wave 4 retracement in minute degree, so I'm still waiting for one more high in the $38,000 to $42,000 region for our wave 5 in minute degree of our initial impulse in wave 1 of minor degree before our wave 2 retracement in minor degree can finally begin. As stated in previous videos, the 61.8% Fibonacci retracement and the 0.618 trend-based fib extension both overlap at $39,000 and will prove to be a major liquidity point. Notice the $39,000 level falls right in between our resistance area we talked about earlier that spans between $38,000 and $42,000. That being said, taking a look at the long-term picture, even if there is a rejection in the $38,000 to $42,000 region, our wave 3 target and intermediate degree still is at $80,000, aka the 1.618 trend-based fib extension. Moving into the S&P 500, last video I left you guys off with saying that we might catch a bounce at the white 1.618 trend-based fib extension level, and even I didn't think the S&P 500 would rally as hard as it did this week. This bullish wave count is back into effect. If last week was the bottom, then the wave 4 retracement was simply in the form of a 1 to 1.618 ABC zigzag correction. Wave 4 never intersected with wave 1, so this bullish wave count has not been invalidated. If the S&P 500 continues to rip towards the upside, the new all-time high target is between the 0.618 and 0.786 trend-based fib extension levels that span between $4,900 and $5,100. Just a friendly reminder about how manipulative the financial media is. Last week, there was a report that came out that claimed that the CEO of JP Morgan & Chase, Jamie Dimon, sold JP Morgan shares for the first time ever. And notice how that piece of news came out right at the 1.618 trend-based fib extension support level. Never trust the media because honestly, it's all fake news. So taking a look at the Bitcoin against the S&P 500 valuation, nothing much to talk about here. The Bitcoin against the S&P 500 valuation is having a slight pullback this week because the S&P 500 had a mega bounce this week. We're still on track for new all-time highs, and as established in every single Bitcoin episode, if the Bitcoin against S&P 500 valuation continues to push higher, we are in a bull market, not a bear market. So finishing this episode off with some regression, just a quick overview. The red region represents Bitcoin's overvaluation, the green region represents Bitcoin's undervaluation, and the blue line represents Bitcoin's fair value. Bitcoin's fair value this week is at $34,989.36, which is pretty much where Bitcoin is trading at right now. As established in almost every single Bitcoin episode, once Bitcoin can successfully rip past the blue fair value line, that's when the real fun and real cryptocurrency profits can be made. Listen, I'm not getting out of bed for no $34,000 Bitcoin. We're still expecting much higher prices. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one.